I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Europe is turning negative as Italian bonds have a bad auction and Cyprus banks struggle to reopen. Will the markets absorb these headlines and reach historic highs? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are lower this morning, but stocks rallied yesterday and got us close to historic highs. So how did you feel about the rally, Scott?
I think that this rally, or this stage of the rally, has been a little bit more difficult. We've had 3 key inflection points that we talked about technically this year. We talked about first in the first month, how do we handle 1474, which was last year's September high. Then we peaked at 1530. Remember, that was the Italian election peak. And then we needed to figure out, do we hold higher? Do we take that out? And we took that out with some power. So now here we are looking and knocking on that door of 1560, 1563. And I think some traders are trying to stay with that rally or trying to stay long, but it's been pretty hard to. It's been hard to find some great ideas to feel comfortable with and gravitate towards.
Right. Well, so could you give us a visual then and show us the levels that you're watching in the S&P?
Yes, and we'll do it on a few different time frames. So if you go to the chart here of the SPX, you will see that, first of all, look at this gradual trend. This was the low back in November. Here's your higher low. So this gradual trend isn't even getting tested. But then we talk about the trader trend. We talk about the accelerated uptrend, which I feel more comfortable following. And this broke right here, right around that Italian election scenario when we broke the 8 and 21 day, pulled in like 45 handles, but held this gradual trend. Then we regrouped, held higher, and then the question was, how would we handle this 1530? We closed above it, took it out, and then continued to create another new accelerated trend. So then this started to get a little choppy up here because of what was going on with Cyprus, and no one really knew what could happen from it. And then yesterday we closed at the highs of, 1563. But if you look here, you have red bar, green bar, red bar, green bar. You ever play that game when you were a kid? Red light, green light, 1, 2, 3?
Yeah.
That's what traders feel like. You close on the highs and you open lower. You close on the lows, you open up. So there's really not that much continuity. So there is still frustration. I don't think people are celebrating the new highs here like it's supposed to happen, back in the day.
Right. So with that lack of continuity, and if we go back to the beginning of the week, I think you started the week with about 9 longs, maybe 1 or 2 shorts. How has your positioning changed?
I actually didn't have enough longs that I went and switched to the spider long because I couldn't find any more ideas, and I wanted to stay with the move just in case we took out 1560-ish. I'm like, you know what? I don't have that many longs to insure. Like earlier in the week, I had a lot more positions that I liked. So I had 9 longs, and you have to have a hedge on just in case something happens, and that hedge is what has you sleep well at night. So with that said, yesterday during the day, I'm like, wow, we might take out these highs. I need to have more on. So I bought some spiders and closing the highs, and now we're opening lower. So I'll try and figure out whether or not it's viable to go green and then shake it off for tomorrow, or if we have to spend more time here. So I do think, like we've talked about, it's not an all-in, all-out environment. It's have your positions, trade around them, use hedges, and don't just have short on the brain, but if we start acting really weak, you can make some money short too.
All right. Well, did you want to show us any more time frames on the S&P, or should we move on to the sectors that we're watching right now?
Well, since it's in the news, let's just go a little bit more macro. So if you look here at the chart of the SPX again, but you go on the monthly, which we've shown a few times, this is that triple top that everyone's kind of pointing to, or if you're a bear, this is your last hope that hopefully, we fail right here. So if you look across, you will see this is where we're at, and we're pretty close to breaking through. But also, if you look at this monthly chart, if you didn't read the headlines or obsess over them, you will see something different. You'll see this red dog reversal back here in 2009. Then you had a higher low, another higher low, and a series of higher lows, which is technically good. I'm sorry for all this jibber jabber in here, but we just did this on a daily. So all in all, this is the number that everyone in the media is talking about, 1576, 1576. Like we said to in the blog last night with CNBC, we contributed, said it's not the importance of the milestone, it's how you approach the milestone, and if you participated along the ride, so you could celebrate it. And it's a little different now. You don't see, the horns and the wavers and this and that. I think, a very smart man that I was talking to a little bit earlier was saying is like you don't see the reporters outside the Dow Jones reporting all-time highs like you saw last time it happened. So sometimes that means we still have more room because not everyone's in and everyone's looking for a reason to get out. So I guess until we see those horns blaring and everyone, feeling good, then I think you get a little bit more cautious.
Well, maybe a lack of that celebration has something to do with the fact that we're getting a lot of mixed signals out there. We're getting a lot of mixed signals out of high beta tech, a lot of mixed signals out of the financials. The financials went from negative to positive yesterday, but not a lot of power there.
Yes, so I think that's like the heartbeat of a strong rally. So if you have strong financials that are participating, typically traders feel a bit more comfortable. So in the sector spotlight, we talk about the financials, and if you look here at Goldman Sachs, you will see, it started to act a little bit faulty. There are two things you could look at here. First, this is a very powerful trend that was intact all the way from when it broke above 121 here, which we had on off the charts way back in December. Okay, then it broke. This was right around the Italian elections and then went sideways. And then look what happened here. It was wedging. So traders were like, is it going to break to the upside or to the downside? And what happened was it broke to the downside. So you could have used this as a high level stop if you wanted to take a few tiers off the table or a short. And then it broke below the 50-day. So I think now this is going to give us some clues on whether or not we could continue to hold in there. Here was yesterday's low in Goldman Sachs, 144.87. I think if we could hold this floor here, perhaps some people dip back into Goldman Sachs. But if Goldman Sachs starts leading us lower, breaking this mini support level, then I think there's going to be more weakness in the banks, and it's going to be hard for the overall market to get much more traction.
Right. Well, that's a name that we've talked a lot about. We've also talked a lot about Bank of America, especially after its recent rally. But the stock took a rest yesterday, closed down almost 1%. So would you say maybe it's just digesting before being able to make another move higher?
I think that this is a pull-in to buy. Some things rally to be sold. I still think that according to the monthly charts, the target of 15 plus will be reached this year. It's just how you get there and what time frame you approach it on. We've been talking about Bank of America since $8 with that call spread back on Bloomberg. And then if you look here on the chart, this is when you had your core long right here, 995. You remember that? That was an unbelievable scenario when it broke above 995, went tight, another bull flag, and then continued. But look what happened here. I remember when it broke this trend line, everyone's like, I got to sell Bank of America, it's over. So if you sold it there, okay. But what happened if you didn't get back at support here or didn't get back here? You weren't feeling so great as it was at 1294. So that's the same thing right now. Right now we're retracing. So if you did sell into strength or you're selling because we broke the 8-day, make sure if we do hit that 50-day around 1183 and you see some type of reversal there or relative strength, you get back in because I do think Bank of America has higher prices at some point later this year. All
right. Now, what about a stock like JP Morgan where there has been a short-term downtrend in place, but it looks like it's trying to build a base at its 50-day?
Yes, this one I think is now being a little bit more targeted. It's almost had like a little bit of a stealth move lower. It's been trickling and you don't hear people worried about it yet. So if JP Morgan starts breaking the 50-day, I think that too is going to raise some concern. So here you go, you look at the chart of JP Morgan. If you look here, these were the two inflection points, right when it broke this downtrend in early December, and then you had this nice gap to start the year. And it's been also following the 8 and 21-day moving average. And then right here, it looked like it was going to break out, and it was a little surprising that they didn't get great grades during the stress test. And since then, it's been just trickling lower. So I think we're at a key spot here on JP Morgan. Okay, you have a small little wedge here. I'll let you look closer at it so you know prices. If it starts taking out the 50-day, and goes below this 48.38 with any kind of force, then again, skeptics are going to come out. But if it could hold here, I think above 49.32, that's probably where traders say, okay, it's getting back in motion for the upside.
Okay, great. And now let's talk Visa, which got some nice follow through to Monday's breakout. The stock closed up over 2% yesterday. Does it need some consolidation now after these moves?
Yes, my rule is I don't buy after the third up day or the fourth up day. I trim it, and then when it goes up 4 or 5 days, I usually cry about it. So that's my style. I think I had to pull it out of one of my friend's portfolios yesterday just because it was up 3 days, and that's the same guy that saw the relative strength we talked about in yesterday's morning call because he had a nice tight pattern and it broke out with volume. You look at the chart here of Visa, and you will see, nice consolidation. It took, 3.5 months, then it went above the 8 and 21 day, and this is a day to love for traders. When you break out above a key resistance with a leadership stock, with volume and a weak tape, you have to take notice. And then yesterday, guys got follow through. We haven't had any real follow through, or I've been having a hard time finding it. So finally you had some, so that's good. Okay, so if you got that tactical trade, you made some money, and finally you're like, okay, a breakout worked. And again, frustration's out there because there's not that many of these, type of plays.
Right. But following Visa's breakout, MasterCard finished up 3% yesterday. Could continuation be in store today for MasterCard?
I think so. And it's good that they moved together, that all those fancy algo guys aren't like, I'm going long Visa, short MasterCard, or this and that, like they've been talking about, like, long Apple, short Google, whatever. It showed it's a laggard to Visa. And typically your best bet is always going with the leader stock and not the one that follows along. But I think overall this has been a very strong stock. It's just higher priced, a little looser, harder to deal with, so it wasn't as powerful. But if you look here at the chart, nice day. Okay, this is a break and a close above this recent resistance. Now I'd like to see it hold 530. Okay, if MA holds 530 and goes sideways, I do think it can continue. If it opens up down today with the futures and goes positive and trades through yesterday's high of 537.19, I think you get some more cash flow, kind of like what Visa did, because this is only day one and Visa had, I think, day 3.
Right. Well, as we said before, we're also getting mixed signals out of high beta tech. We're going to go in the trenches with that, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, which is a mixed bag right now. Apple took a break after its 3-day rally yesterday. Looks like it's trying to hang on to that 50-day. Will it be able to?
I think that's a
$1 million question?
Big money question today. And today I actually come in flat Apple. And I've been trying to hold it ever since it broke above 440. We had 2 different call spreads that worked out pretty well. Got to give a shout out to Richardson on the site. Monday, he's like, Scott, you have weekly options. There's no Friday. We're at 469. You bought the 460s, sold the 470s. You probably should manage it. Well, thank you. And I think the site thanks you because we sold it there, tweeted about it, and wound up being, we've risked $2.50 to make 6. Great risk reward, and then stayed with the common. But yesterday we opened up, went negative, so I'm like, you know what, we could probably be cute and sell it around here 464 and try and buy it at the 50-day, which could be tested today, which it looks like it is pre-market. You go to the chart here and you will see here's Apple, and here's been this huge downtrend, very fast, furious, rattled a lot of people, and then finally here we had a nice cute trade when we took out this 440 and then we broke this downtrend. Next small obstacle is getting above the 50-day, which gave us another nice trade from like just say 458, and then here was that peak on Monday at 469. So now here we are coming into the 50-day. I think for short-term guys, they're going to be watching this very close. Okay, so for me, I'm going to be probably on a plane to the West Coast and have an order in to test it there with the stop a few dollars lower because I'm not going to be sitting in my seat. So anyway, if you did sell this strength, this is a spot to look at today tactically, and if it were to go positive and trade back above yesterday's low 460.53, that would create a nice little bottom tail into this flag pattern. But I do think if we close below the 50-day, all the Apple bears and skeptics will become running out and saying that was it, that's the bounce, and get out of the way. So I think the next day or two will be pretty important there.
All right. Well, if you're coming in flat Apple, I'm curious what you're doing with Google, because Google did close slightly higher yesterday, but still looking lethargic, couldn't find a lot of momentum, and still getting resistance from its 8 and 21-day moving averages.
Well, this one actually trickled lower when Apple trickled higher. So it'll be interesting to see if that correlation continues, because a lot of people said big money out there was shorting Apple, during the decline and buying everything else in the market, including Google. So, believe what you want to believe. We'll look at the price action anyway. At this point, Google's at another inflection point. So it's been a small pullback. It only came into the 21-day moving average. It's been a monster move. You look at the chart here, you will see here's your gap to start the year. Okay, so if you trade versus gap, so this is with their earnings, you could have bought it versus that. And then once we took out last year's high of what was this? This was 774. That was your extra trade. And then finally, right around 800, that's when all those $1,000 price targets came out. So it's like the curse of the $1,000 price target. So here it is. It's getting nice and tight. I would say this is probably a good spot to be long against. This low here is 801. This is 801.47. For this to get going, though, it's going to need to break above this 819 to 820 area with volume and close above it. Then maybe it gets back on its way to the highs. So I think Google is getting tight enough that you need to watch this very closely for opportunity.
Okay, well, that's good. Opportunity is always good. Let's talk Baidu, which closed up almost 0.9% yesterday. It's still trading in a range around its 8-day moving average. So what does Baidu need to break above to pick up some momentum?
This has been a laggard. This has been trickling lower. This has been a better short vehicle than a long vehicle. But every now and then that changes. As of right now, it's showing you no signs that Baidu's back on track. I do think that, if you look at the chart, maybe there's opportunity, but it's really not that compelling. I don't even want to spend time on this, but if it were to break and close above this small area above 87.05, maybe it can get back. And actually, there's a little trend line here if you want it to be cute and draw this. So it's got to really get above this, but it has to show conviction, show volume, and do something different. Now, this was the earnings gap down and consolidated. This was a good short entry for some guys below this 94. So at this point, that's your trend line. People, if that changes, then maybe you go in there for a cute, but then it's got to build, and Baidu has a lot to prove.
All right, and LinkedIn took a break yesterday. It's trying to hold current support around 174. We always talk about this being a best-in-breed stock, but for the short term, what would get it back to those highs?
Let's just say trade it long versus 172. We got to move on.
All right, and Netflix finally had a nice breakout move yesterday, closed up almost 5.5%. The stock closed at highs, signaling potential follow-through today.
Well, this will be something interesting because Netflix has tried to break out 3 different times since the big move, and yesterday it closed near the highs. So I'm long a little Netflix. I think if you see relative strength with the futures down and it starts to go positive, I think above yesterday's high, it could be a good active trade for you. If you look here at the chart, you will see, this is the support that held going sideways. This was what, 177-ish. So you go across, and I'm not able to grab my trusty line here. It's like, I need my utensils. Okay, here it broke above this small little spot, closed well. I would say staying above 188 would be good, and then if we were able to take out yesterday's high and continue the momentum, we could see a 200+ number if the market doesn't fall apart, which at this point, it's been holding in there pretty well.
All right, speed round. We're going to do some quick hits here. MGM is consolidating above its 8 days. Should this be on our radar for a breakout?
Yes, I think that the casinos have had some love lately. MGM has to get above 1320 to 1350 to get back in motion.
Hewlett-Packard put in a new high at 2371 yesterday. Does it have more room to the upside?
This has been the pain trade, and I had a little bit of pain with it. And sometimes you have to take your own thesis away, and I was like, Hewlett-Packard, PC sector slowing, the growth is slowing, this and that. PS, it's been almost a double since we started the year. I tried a cute short in here on Hewlett-Packard on this reversal day, and I stayed a little bit at the dance too long, and wound up giving me some sore feet. But anyway, closed at the highs here. That was a horrible analogy, and it's still following the 8 day. As long as it stays above the 8 day, I wouldn't be just trying to have short on the brain there.
Come on, everybody loves the Scott metaphors. Intel broke out of its descending channel yesterday, finishing the day up 3%. Where's next resistance?
Well, it's interesting because this was upgraded this morning, and it was so strong yesterday. Oh, someone always knows something, yeah. But you don't have to know something if you know charts, because you look here, it had a day 1 yesterday. Intel, has been acting a little bit better. So here was your day 1. I think it's up a little bit pre-market. This is, one spot pivot. This could be trying to get back to its 200-day around 23. And, the mega caps are all interesting because they all have so much cash. And, people are a little weird on the short side because, look what happened with Dell, this whole private equity deal. If all this money's flowing around, some of these cheap stocks with low, dirt cheap PEs, could come back in vogue just like a Hewlett. And Intel is, I think, in that realm.
All right. Well, finally, Walmart put in an inside day and digested its breakout on Monday. So, where could we find the next breakout move?
This one we've talked about at 71, and we talked about at 74 yesterday at an inside day. Target's been unbelievable. There's been a lot of stealth rallies in retail, and this one hasn't been really stealth because it's, we've been talking about it a lot, so hopefully we put it on your radar and it wasn't stealth underneath. This was our retail stock of the year last year, and then this year also some opportunities. So if you look here at the chart, This was the last time we talked about an inflection point around 71, 72, and then it pulled into the 21-day, crossed 74, holding above it. For it to continue, it's going to have to get above the 75, and then you have last year's high, which comes in closer to 78. But this still looks like it's in the game. When the market wants to rally, they go after this. And let me just take a quick look at Target, which has been also a really nice performer. See, this is why traders are having a little bit of a tough time, because we don't gravitate towards Target or Walmart or Coca-Cola. But if you're an investor and you have them in your IRA, you know what, maybe you don't hate the stock market.
Right. Well, okay, so any closing thoughts then today on what traders should watch for?
I just think that, we've had this back and forth, red light, green light, red light, green light on the choppiness up here. There's going to be some noise around what goes on in Cyprus when they open the banks, and who knows, cameras could show people breaking windows, doing whatever, so it's going to create some volatility. I think less is more right now. For the quarter, we're up almost 9.8%. So a lot of traders out there are scratching their heads and saying, oh my goodness, I lost money this quarter. If that's you, do not try and make it up in the next 2 days. Just realize what you did wrong, make a few changes, and then take a neutral approach to next quarter and use less opinions and more price action, because I think technical traders have been participating a lot more than the overall smart guys that think the market can't go higher because of the potential backlash from Cyprus or from the Italian elections or from the sequester or from the physical cliff or the Mayans last year. There's always some reason to obsess, but every time we obsess, the market seems to hold in there until it doesn't. And when it doesn't, then we'll be a little bit more bearish.
All right. Thanks so much, Scott. Happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.